Welcome back, guys. We're going to talk about supply and demand today. A lot of you guys have been asking me, how do you find levels for rippers whatsoever? So it's pretty simple actually to find it. It's literally a drawing game. Majority of traders just fail because of discipline, emotions, fear, and greed whatsoever. I mean, sometimes you do have external factors that make you lose. However, that's why you only play with positions you're capable of losing. But let's get right into it. This is one of the trades we caught today. This demand zone right here, and then eat it up, and also this supply. I think I drew it on SPY maybe, but not on ES. Oh, right here. Yeah, I think that was this one. But we took a short here and we took a long over here. I was looking at both futures and SPY to try to like correlate it, but anyways, I mean, we took that short that paid. This thing paid, I think, close to 120%, maybe 200. I think even went to 300. But so all right, let's go back to ES. And always make sure to trade with as much confluence as possible. We took the short today because of solely technicals, but we also went into calls after because of a sweep that we saw here on callsorputs.com. I believe, let me see, potential openings. So again, look, this was a perfect play. I mean, look, 435.80. I think maybe that's when it dropped. Let's see, 435. Wait, whoa. 11:38 a.m. 11:38. Actually, that was not so good of a move, honestly. Oh, it was this one, but I'm not sure. Oh, never mind. They're playing for freaking 2022. Okay, I get it. This call we took, and I ended up paying. But anyways, let's go right into it. To find support, supply and demand is literally supply and demand is resistance and support. Supply is resistance, demand is support. They're basically just levels of support or levels of resistance. It's a zone. That's why you call it demand zones and you call it supply zones, because sometimes you have price action is not guaranteed to be at a certain level. It is within a zone. So like over here, you know, you're within a zone and you are rebounding and reversing, bouncing off two levels. If you were trading support and resistance levels, where exactly is going to be your support, or where is going to be your resistance? You know, is this support right here? Is this support? Is this support? It's going to just be a bunch of like guesstimates, right? That's why I guess whoever invented this, quote unquote, thought of it like this. Instead of doing just support and resistance, we could look for a zone where you could look for a reversal or whatever you are looking for. So the way to find it here, this one, I think it was the 2 hour one? Was it ES or was it day? Yeah, it was probably the 4 hours maybe. All right, so here it's pretty clear that you have buyers. So, you know, the buyers, it is a 4 hour chart. So again, you have to make sure that if you're trading a 4 hour chart, you should have, you know, give it time, because price action does not move right away. Sometimes it takes time to move. So that's why sometimes you will see it fake you out by going below it and then it comes back up. But even so, sometimes you could wait. So like, let's say, you know, you get in or whatever and you see it slowly, you know, it dipped below it, you got faked out, and then you see it coming back up and it closes the candle near that level or whatsoever, you could get in then. That's the way you could trade. But to find these zones are pretty easy. As you can see, this is where you would initially, out of here, when it closed over here, this could potentially be a formed demand zone. You know, the prior supply was here, now you have demand potentially here. So when it came down, you usually will wait for a retest, which you see here. This is where we entered, because today was the day we took the trade. So this was a prior potentially demand that turned into demand from a previous supply. So here you have obvious buyers right here. When you're looking for supply and demand, you're literally just looking for buyers or sellers. And here you can see clearly that buyers came in, hence you got wicked out. So when you get wicked out, you know that there's buyers there scooping up shares. So we get this initial drop. You probably wouldn't have known that this was a supply or a demand until you get the retest. So when it was coming down today, we're like, okay, just imagine, you know, without looking at all of this. And then we found this potential demand right here. We'll draw a level and then we see it react. And once you see the reaction, that's when you get in. So, I mean, you see this all the time. If I look at SPY, a huge mover here too, I believe. Right, if I was to clear the chart out, right here is the demand, as you can see. Oh man, I hope I could freaking plot all of those again, but over here also. So like this right here is demand. Why? Because there's buyers over here, and there's also a prior supply that made it drop. So here to the wicks would be a demand zone. It could be here, or if you want to exhaust it, it could even be all the way down here, which would correlate because over here as well, you see that there's buyers scooping it up. So this would be a AKA demand zone. It's a $1 move, so obviously that's not bad at all, a $1 move. So you can set your stop loss or whatsoever. But as you can see, this is a demand zone. Here you have buyers, here you have buyers. So that's why instead of a support, which you would have just plotted this line or this line, you have a zone. So as long as it touches this zone, it could potentially reverse. And that's exactly what it did. So it came down, reversed, came down, reversed, came down, reversed again. That is what a demand is. So if it comes back down, potentially it might continue rebounding. Depends. Nothing is, you know, obviously the same. AMD is another perfect example of this. It's been range bound forever. And this is an easy demand. You don't even need to look at the chart. So there's multiple reasons that this could potentially be a demand zone. Once it gapped up, you obviously see the rebound here. So this is where buyers are. It got obviously scooped up. So we could just simply just look at this candle, do the rectangle for the zone. This is where buyers are. And as you can see, it is pretty obvious that there have been consistent buyers after this initial gap up right here in this level. Look at that. Every single time, just a ripper after it touches that level. So it's pretty easy. I mean, it looks easy right now as I'm doing this video. I'm sure you guys are like, wow, like it's trading this easy. The thing with trading is that it's not this that gets people losing in their trade. It is their emotions, selling when they're scared, or, you know, buying when they fear of missing out something, or something of that sort. So that's why people fail, not because they don't know technicals or whatsoever, or if someone's better in technicals or not. I think it's simply that like right here would be a supply. It's simply because of emotions. See, like here didn't hit, but that's why like you could actually wait. Oh wait, sorry, I didn't even draw it correctly right here. See, it hit. This is why it is very, oh, look at this. I hate this thing. But this is why it's so easy. You look for a zone, prior rejection. Here is also where it sold off last time. Boom, right there. From here to here. And look at that rejection. Look at that rejection right to the T. If you just look at it, look at that. Beautiful. And this is how you do it. Now, how do you find, like, you know, potential supply and demand on other time frames? Because, you know, you get into this trade over here and you're looking for a sell or whatsoever. How can you potentially find the other spots? Now, again, it's very easy. So here you obviously see some sort of resistance here, and resistance here, right? You could either go to another time frame and look at where they get rejected, or if there's like some sort of like consolidation, or consolidation and sell off every time it reaches a certain level or not. So here we obviously get a sell. Right here we have a sell. So that's a potential supply level. And as you can see here, it's supplied and then it ripped from there. because supply could turn into demand, demand could turn into supply. But as of right here, you would have known that this is somewhere you would see resistance. And look at this, it comes down, hits that part, comes down again. That's how you play it. You could go to like minor time frames and look at it like that if you want, and you will see that there's a consolidation or a drop whatsoever. Here, consolidation, consolidation, consolidation. Right here, so-so. Right here, consolidation. So it's really easy, and I think you guys will find this super easy to plot these supply and demand levels. However, remember, it's always execution, execution, execution. If you can't put what you learn to use, it is useless. You know, you could get a master's degree, but if you can't apply all of that knowledge, there's really no point of it. So make sure the number one thing in trading is actually emotions, consistency, and also position sizing. No matter what, even if you follow alerts from people, we offer alerts. If you guys are interested in our Discord server, you could go to chancetrades.com and you will see our alert services there, or go to callsorputs.com, which is here. Click that Discord server link and you can join our Discord. But you can follow people's trades all the time. They have like an 80% win rate whatsoever, but then you end up losing. Why? Because you 100% in every single trade and you end up losing. Position sizing is key based off of risk and reward. So larger positions on trades that you feel are confident about, and less position sizing in not so confident trades, or just don't even take it. So that's why, like, you could follow someone who's great and consistently winning, however you still end up losing. It is not about I wouldn't say it's about the chart. It's not about anything. You can have a strategy that actually works, but unless you're able to apply it and use it, it is useless. So with that being said, thank you guys for participating. Smash that like button, subscribe to our channel, and share this video with all your friends that are trying to learn supply and demand, aka support and resistance on steroids. Have a great day, and comment below what you think of the video and how we can help you guys out next time. Thank you guys. Bye bye.